Hi everyone, I'm Connor and this is What's Trending on YCharts. Every month we share our data with you to reveal the stocks, funds, and econ data getting the most traffic on YCharts. Today we're going to be talking about Exxon Mobil's dividend yield, risky versus risk-off mutual funds, and finally the US discount rate at which the Fed offers money to borrowing institutions. If you have any questions about this data or want these visuals, check out the description below. Don't forget to hit that subscribe button. And now, let's see what's trending. All right, let's start things off with the hottest company or stock pages on YCharts for the last month. We see a lot of dividend pages here, led by Singapore Airlines and Petrobras. Then we see Coinbase caught up in that FTX scandal. Other names like Apple, Ford, Walt Disney with that new old CEO, Bob Iger, and then Target and Amazon as we gear up for the holiday season. But we're going to take a closer look at Exxon Mobil. We've heard a lot about energy names since 2021, definitely outperformers. And Exxon, the largest integrated oil and gas company out there, is doing really well this year. We have the total returns in purple, simple price returns, no dividends in orange, and then that dividend amount in that blue line, which they just announced is going to move even higher. So this chart really visualizes the value of investing dividends. You can see the gap between those purple and orange lines. Dividends really helping ExxonMobil stand out this year. But I'll also note Chevron pays a higher dividend and has a better year-to-date performance than Exxon. All right, now let's turn our attention to the hottest mutual funds and ETFs on YCharts throughout the month of November. These funds got the largest increase in their page views over the last month. So a big bifurcation here between money market and income-oriented funds, and then things that are relatively more risky like that Fidelity, Select Software and IT Services, First Eagle Small Caps, Morgan Stanley Insight, and Fidelity Select Semiconductor. So it's interesting to see risk on, risk off, two very clear paths in opposite directions here. And so let's continue with that comparison. The top performer of those 10 funds is the Allspring Money Market Premier Fund, up 1.36% year to date. The worst performer, Morgan Stanley Insight Fund, down 59% year to date. So a really big gap, and it's interesting to see that these very risky and very safe mutual funds have been popular in the month of November. All right, as we always do, we're shutting it down with the hottest econ data on YCharts over the last month. At the top of the list, this U.S. personal savings rate. Unfortunately, we've seen that go down dramatically since the dust has settled on COVID, followed by the Bitcoin price. Also seeing that crash pretty hard with the FTX news. And then some other interesting ones, effective federal funds rate, unemployment, recession probability, and one that we're going to focus on, the US discount rate. And this sounds, what is the US discount rate? Well, the Fed operates what's called the discount window through which they lend money out to financial institutions. This is how banks make money, right? They lend out money at one interest rate and then borrow at a lower interest rate. And that's the comparison we're looking at. The Fed funds rate, which is set to determine the overnight borrowing rate, and then the US discount rate, the rate at which institutions can borrow money from the Fed. And what's interesting is that in this recent run-up of the Fed rate and the US discount rate, that spread is very tight compared to back in 2016, 2004, 2005, when those increases started. The Fed was maintaining a spread here between the borrow and the lend rate, but not the case anymore. So I don't really know what this means. Perhaps the Fed is being a little bit more conservative and not taking advantage of the spread they could realize. But this is interesting that the last two times have looked pretty different from the current Fed rate hike and discount rate increase in response. All right, everyone, that does it for us. Today we talked about Exxon Mobil's dividend yield bubbling higher. We took a look at some pretty risky mutual funds compared to those relatively safe money market funds. And finally, we looked at the spread between the US discount rate and the effective federal funds rate. Join us next time to see more of what's trending.